More often, new home buyers get confused between title insurance and homeowner's insurance policy. Both are not the same. Both have different objectives and purposes. Both are needed when you are going to buy a home. The premium for title insurance usually is paid one time as part of the closing costs. The premium for a home insurance, on the other hand, will be like that of an auto policy. It will be paid throughout the year at chosen intervals according to what you had agreed with the insurance company. It can be monthly, quarterly, yearly, or even be part of the mortgage escrow payment. In this video, I will briefly summarize the differences between the two. Title insurance purpose and functionality. Title insurance is designed to protect against problems with the title or ownership rights of a property that may arise after the property has been purchased. These problems typically stem from events that occurred before you bought the home but weren't discovered during the title search process. The title search process. When you buy a property, a title company or attorney conducts a title search. This process involves reviewing public records to verify the legal ownership of the property and to check for any liens, encumbrances, or other issues that could affect the ownership. The goal is to ensure that the seller has the legal right to transfer ownership to you. Possible title issues. Unpaid property taxes. If the previous owner failed to pay property taxes, the government could have a lien on the property, meaning they could claim the property until those taxes are paid. Unresolved mortgages. If the previous owner still has a mortgage or other debt secured by the property, the lender could have a claim on the property. Fraud or forgery. In some cases, documents related to the property's ownership might have been forged, or someone might fraudulently claim ownership. Unknown heirs. If a previous owner passed away and an unknown heir comes forward claiming ownership, that heir could challenge your ownership. Easements and encroachments. An easement gives someone else the right to use part of your property, like a driveway, and if not properly recorded, it could lead to disputes. Encroachments occur when a neighboring property owner builds something on your land. Types of title insurance. Owner's title insurance protects you, the homeowner, from any financial losses related to title defects. This is typically optional, but highly recommended, especially if you're making a large investment in the property. Lender's title insurance, required by lenders when you take out a mortgage. This policy protects the lender's interest in the property until the mortgage is paid off. Coverage duration and cost. Title insurance is a one-time premium paid at closing, meaning you don't have to make ongoing payments. It lasts as long as you or your heirs own the property. The cost varies depending on the property value and the specific insurer. Real-life scenario. Imagine you buy a house, and a year later, someone claims they inherited the property from a relative who previously owned it. They say the sale was invalid because they didn't give consent. If you have title insurance, the insurance company would cover your legal costs to defend your ownership, and if you lose the case, they would compensate you for the loss. Homeowner's insurance policy purpose and functionality. A homeowner's insurance policy is designed to protect against future risks that could cause damage to your home, its contents, or your financial well-being. This type of insurance covers a wide range of potential perils and provides liability protection. Core coverages. 1. Dwelling coverage. This part of your policy covers the physical structure of your home, including the walls, roof, and foundation. If your home is damaged by a covered peril, like fire, wind, or vandalism, the policy pays for repairs or rebuilding. 2. Other structures coverage. This covers detached structures on your property, such as a garage, shed, or fence. 3. Personal property coverage. This covers your personal belongings, such as furniture, electronics, clothing, and appliances. If they are damaged or stolen, your policy helps pay to replace them. 4. Liability coverage. This protects you if someone is injured on your property or if you accidentally cause damage to someone else's property. For example, if a visitor slips and falls on your icy driveway, this coverage can help pay for their medical expenses and legal costs if they sue you. 5. Additional living expenses, AL. If your home is damaged and you can't live there while it's being repaired, AHomeowner covers the cost of temporary living arrangements, like staying in a hotel. Types of perils covered. Common perils include fire, lightning, windstorms, hail, theft, vandalism, and certain types of water damage, though typically not flooding, which requires separate insurance. Exclusions. Certain risks, like earthquakes or floods, are usually not covered by standard homeowners insurance policies. You may need to buy separate policies or endorsements for these risks. Payment structure. Unlike title insurance, homeowners insurance requires regular payments, usually on a yearly or monthly basis. The premium cost depends on factors like the value of your home, location, the amount of coverage, and your claims history. Real-life scenario. If a fire breaks out in your kitchen and damages part of your home, your homeowner's insurance policy would cover the cost to repair the damage. If your home becomes uninhabitable, it would also cover your temporary living expenses until you can move back in. Summary of key differences: what they cover. Title insurance protects against legal disputes over ownership and title issues that existed before you purchased the property. Homeowners insurance protects against physical damage to your home and belongings, and provides liability coverage for accidents or injuries that occur on your property. When they are used. Title insurance. Used if a past issue with the property's title comes to light after you've purchased the home. Homeowners insurance. Used to cover future events like fire, theft, or liability claims. Payment structure. Title insurance. A one-time payment made at closing, lasts as long as you own the property. Homeowners insurance. Ongoing payments, usually annually or monthly, required for as long as you own the home and want coverage. Importance to homeowners. Title insurance. Crucial for protecting your ownership rights and financial investment in the property. Homeowners insurance. Essential for protecting the physical structure of your home, your belongings, and your financial liability in case of accidents or damage. Both types of insurance are important, but they serve different purposes and protect against different risks. It's often necessary to have both to ensure you're fully protected as a homeowner. Thanks for watching. Please subscribe.